just getting some headlines here from one of the Fed voters this year. This is the president of the Philadelphia Fed, Anna Paulson, who is speaking in Philadelphia. Just want to pull up. She says modest adjustments to Fed funds rate likely appropriate later in the year. She still qualifies the Fed policy as modestly restrictive. Just trying to pull up all the headlines from her. Paulson says, yep, still a little restrictive. I don't think there's anything here that changes the pricing, which is now firmly at pause for January 28th Fed meeting. Remember, we are getting some new voters. She's one of them. We get Cleveland now and Dallas. Both of those ladies actually have been more hawkish in terms of their speak about worries about inflation, less so about the labor market. Paulson here also saying the baseline outlook is, quote, pretty benign. So you could see her as someone that might vote for cuts later on in the year, but right now seems pretty content to pause. They're not sounding any alarm bells about the labor market and about the economy. She says that inflation is moderating, growth is around 2%, and the labor market is stabilizing. Stabilizing doesn't suggest anything like, we should be cutting rates to try to help the jobs market. Market's still pricing in about 50 basis points of cuts, so 2 cuts this year. Question whether it'll be March or not, and how early those cuts could come. I think a lot depends on just what happens with the labor market. But even with the inflation reads that we've had late this week, nothing's really changed in terms of expecting that pause.
Yeah, I think it was Rick Reeder earlier in the week said that inflation is yesterday's problem. A view of Paulson to get it to target by year end is kind of what Goldman's expecting to get to 2 by the end of the year.
Target.
Yeah. I would add, though, we're not done with PCE, and there are some estimates that core PCE probably runs maybe 0.2 hotter than CPI, given food away from home, better reflection of the things that actually consumers spend money on.
The food away from home was a very disappointing number in the CPI this week. That actually showed a spike, which, I mean, maybe, there's a little bit of, it's a volatile kind of figure, so let's see, because overall trend had been better. But the food prices is definitely going to be one of them. Look, I don't think you have anything changing in terms of the Fed. What I'll be watching in terms of the bond market, we've been in this tight range for the 10-year, like 410 to 420 kind of range. Let's see what happens with the Supreme Court. If they do rule on tariffs, will there be concerns if they rule against the administration about the deficit? Is that something? That's for instance, one of the, we're looking for ways the bond market might be more volatile this year. We have the geopolitical risks, no question about that as well.